So guys, before I begin, I want to give a shout out to two special people. These guys I actually follow on YouTube, and I get a lot of information from their videos. They're exciting, they're fun to watch. The first one is Tactical Investing, Alexander, and he's really amazing. And if you haven't subscribed to his channel, please do, Tactical Investing. And the other guy is Dylan with Money, and this is going to come as a surprise to Dylan with Money because he doesn't know that I'm subscribed to his channel. And but I like his energy, and he's got just a few subscribers. But I'm very happy to be finding gems on YouTube, people that I can actually associate with and align with. So without further ado, I just want to tell you what I got for you here today. The SPACs that we're talking about, the SPACs. Let's go to them. The first one is Pershing Square Tontine Holding Limited. A lot of you actually know this particular SPAC, but I wanted to mention it. And the ticker symbol is PSTH. The share price is $25.66, and the capital is a meager $5.13 billion. Now, Bill Ackman is the owner of this SPAC, and I want to tell you right now, quickly here, guys, my friends, let me introduce you. If you don't know Bill Ackman, I want to tell you, I want to show you a short video on how Bill Ackman acquires or merges with these target companies. You know, he establishes a shell company, that's the Pershing Square holding, and then he acquires another company that he believes has good business. Okay, so let's find out how this happens.
Going the SPAC route, but at this point, I think their first choice is to do an IPO. Putting aside Airbnb, just speaking generally, what we offer to a company is the ability to inject, $5 billion of cash, take them public. If we started today, if we opened a due diligence, got access to a data room on a company, and had opportunity to spend time with management by Zoom, when I would say in 3 to 4 weeks, depending on the nature of the business, we could get a sufficient understanding of the business to be comfortable, and we could also negotiate a deal, and we could give them certainty on raising capital, and they could become a public company, 45 to 60 days after that initial 30-day period of time. But we give them certainty, if you will, in the first 30 days. A company like Airbnb is filed confidentially. At some point, they're going to file their prospectus.
All right, we don't want to hear about Airbnb, Mr. Ackman. We want to talk about your strategy in acquiring companies, and let's find out. You find a business, you do a due diligence, you study the data, you spend time with the management, you take 3 to 4 weeks to understand their business, and then you negotiate a deal. And if you negotiate a deal, you give them certainty, right, on raising capital. That's so lovely. After that, they become a public company in about 45 to 60 days. They start, basically, the two names, Pershing Capital will become the new company under another symbol. It'll start actually trading on perhaps the New York Stock Exchange. Alrighty, so what he goes on saying, guys, this is what I want to tell you. What he goes on saying is that he will play no particular role in that company after the merger. He also will not seek any appropriate representation, meaning he is not going to be represented on the boards of directors. And the company will have to give up absolutely nothing when they merge. And they will still have their ability for creativity and all the following. Now, there has been chatter before this that he's going to actually merge with Airbnb, but I think Airbnb did not go for that. They wanted to become a public IPO. Airbnb stands at about, I think, $100 billion company. I can't find the information right here, but I think they stand at about $100 billion company, which is phenomenal. But is Airbnb a $100 billion company? I am not sure. But I will tell you now that in 2016 they made $1.7 billion. In 2017 they made $2.6 billion. In 2018 they made $3.6 billion. And in 2019, they made $4.7 billion. This is the revenue. That's the revenue. I'm not really sure about net income because, I'm not sure. I think from what I know that if you go out and buy Airbnb today, you're overpaying for the stock. This is what I think. This is my estimation. But don't take it from me. Do your own research and find out what's going to happen, because I feel like they were valued at $45 as an IPO, and all of a sudden they are like 170, and all of a sudden they dipped down back down to 144. I personally would not buy them at 144. Okay, I'll wait for a very, very, very discounted day, and then I'll go in and buy them. Okay, so that I'm just letting you know what I would do. All right, so there you have it. This is it. And now I want to tell you one other thing. There is no proposed merger with anyone. And I want to show you something here really quickly, okay? I know I'm taking too long talking about this, but I want to show you the graph. So Pershing Square Tontine Holding, and it is currently actually trading at $25.66. And you know this is fairly new, because this company actually, this SPAC, this special acquisition company, had started trading not too long ago, right around November something, November 2nd, November 3rd. As you can tell, ever since, if you draw a line from here to here, it went up from 26. I'm sorry, it went up from let's see here, from 23 to about 25.66. So you have been getting some money. Don't forget that with these big names, you absolutely, a lot of people are actually drawn to the name, and a lot of people are drawn to the success story. And this guy took several $1 million, maybe hundreds of millions of dollars, and turned them into like a couple of $1 billion. I'm not really sure how much, but I know that, because I don't want to look at the numbers right now, okay? I'm just recording this, but I know his success story involves having started with millions of dollars, turned them into, as a hedge fund manager, billions of dollars. So this guy is loaded, okay? Okay, the next one, guys, the next one is Social Capital 6. And this actually trades under the symbol IPOB, right here, IPOB, and the share price currently is at $11.44. And the capital they have is about $1.64 billion. So it's about 3 times smaller than the one before it, Pershing Square. And the CEO is Shamath, and I don't know how to say his last name, Palihapitiya. Let's see what Shamath Palihapitiya will say. There he goes, Mr. Shamath. He's introduced by this host, and I'll just let you hear about the introduction, okay?
Special guest right now, Chamath Palihapitiya, founder and CEO of Social Capital, chairman of the board of Virgin Galactic, of course, co-owner of the Golden State Warriors, and I might as well just say SPAC King, at least during what feels like a frenzy around SPACs, and we're going to talk about his latest...
Hold it there, okay. This one is a little bit more established. I'm talking about the SPAC, not the gentleman, okay? Because this one is going to actually merge with Open Door. Now, Open Door, as you know, is an app. It's a company that has an app, and it's like Carvana, okay? So if you want to sell your house, you'll call somebody, and then they'll estimate, well, you know, what your house is worth, and they'll buy it from you. So Open Door buys houses from people, okay? Now, I don't know about the stories I hear on the internet, but it's like when you sell your car to Carvana, Carvana has to sell it to somebody else, and they have the means to sell it to somebody else for a little bit more money, so they make the difference between the price they paid you and the price they got from someone else. It's the same thing with Open Door. You want to sell your house quick, but you don't want to wait a long time. Well, Open Door comes in and says, like, okay, I'll buy the house from you. They'll buy your house, and maybe they'll get a little bit of a discount, like maybe 3-4% discount. They turn around and they sell it to the next person, and they make the difference between those two prices, okay? So that's how it's going, and as you see right here, now I want to tell you about Open Door because it's a really, really interesting company. The one thing I want to tell you about it is it has raised $1.5 billion in funding, but it is actually valued at $3.7 billion. Not to say that there will not be any other competitors in the future, because, you know, these things, like, even Airbnb has major competitors. Even Airbnb, we're saying if Airbnb becomes a $100 billion company, that means No one has stepped into the market and ate up into the share of Airbnb. There are other players in the market, okay, that can eat up into their business, like Booking.com, like other things. There are other ventures out there. There'll be other people involved in this market, okay? It's not like Amazon. Even Amazon is being actually challenged in terms of its business model by Walmart. Now, Walmart has its own membership, and they're about to actually get their own electrical vehicles. I feel like they're gonna. I think they're buying some vehicles from Workhorse. Okay, so there you go. You have information right there. So basically, this is it. Then the third one right now. The third. Well, let's look at the graph before we move on to the third one right here. So let's see. Social capital is the one we're talking about, and again, this has been around for not too long. Remember, not too long. If we go to 6 months, we see that they've been around for not too long, ever since November 13th. I'm sorry, November 27th. And I'll move myself to this side of the screen, and then you guys can see that in the last, let's just take the last 5 days, man. In the last 5 days, okay, we have seen this company go from $10 all the way to $11.44. So this is picking up steam. This is money in your pocket. In my belief, this is money in your pocket. I think this merger is going to happen on December 18th. So this is very, very close. Keep an eye on this, and if it dips down, you can buy. You have nothing to lose, as a matter of fact. I don't see this going down to $10, to be honest with you. So there is money to be made on this one. Okay? Again, I'm not a financial advisor, but that's my feeling about this one. Let's go to the third one. And the third we are actually going to talk about the third company. And since you were just shouting at me, why don't you just shout at you YouTubers over here? Yeah, I know you love me. I love you too. Meet my lathe. My lathe. Lathe in Arabic means a, what's it called? It means lion. And this lion right here wanted to come out and say hi to you guys. Hopefully you appreciate him as much as I do. He's been, you see what you did to me, pups? Anyway, he wants to talk to you about that last company. And he wants to tell you, do invest in this last company right away. But he says, I am not a financial advisor. So this last one is Tortoise Acquisition Core 2 or 2 Corp. And what I want to tell you is it's trading under this ticker symbol SNPR at a price of $11, and the capital is about $412 million. The CEO is Vince Cubbage. Like that Cubbage, like cub, you know, from my like little cub, little lion. No target for this company has been set up yet, and but there's a story. The reason why it is Tortoise Acquisition 2 is because Tortoise Acquisition 1 did actually acquire Hyliion, which is one of those very popular stocks. It has its own following, and if I were to actually show you, let me just show you here. I'm going to show you Hyliion stock chart. Okay, I'm going to show you what happened here with Hyliion. Let's take a 6 months chart and look at this. So they merged. Then it went up to 31. Then it went all the way down to 19 and 20. Then it went all the way up to $55.85. And today it is trading at $17.32. I am talking about Hyliion, the EV truck. Okay, so as you see, when these mergers happen, the companies have a certain anticipation, have a certain promise, I would call it. And then people get really excited and they want to just go in like, oh my God, that's the next big thing. But what happens to this next big thing is it actually spirals down and you lose a lot of money. So if you stay here saying, oh, I'm an investor for years, well, it's going to take you another 2 years to get up to $55 again. That is the problem. So you have to actually do your work ahead of buying and anticipate what's going to happen with the stock. The history of the stock matters a lot to you guys, okay? Because that's where your money is. Your money is going to sit there for 2 years and it's not going to be invested in anything else other than that promise, that anticipation you had put in this company. Imagine Airbnb going down to about $80, right? It was set at $44. It's valued at $44. I mean, the valuation meets the $44 a share, but it went up to about 170. Now, you spent 170 and you sat down and then it's going down day after day. You're losing money day after day, and all the money you put in there, you're going to wait for it to come back one day, and that's money you could have utilized buying something else. Well, that's my 2 cents on the topic. Now, for this company that I'm talking about right now, let me go back and say Tortoise Acquisition 2 Corp. And I'm going to take the 6 months graph, and I'll tell you it was about $100. It was about $10. And now it is up to about $11. And that's what we talked about in the beginning, okay? No target for this company yet. However, the same person, Cubbage, let me introduce him to you. Here he is talking.
You know, Alan, you're right about the level of activity. There are a number of SPACs out there. By our count, there are 223 active SPACs. 171 of those are still looking for a combination, and they have over $59 billion of capital to invest. In terms of why companies are interested in SPACs, from their perspective, they have a straightforward path to being public. They're accomplishing that goal through a merger agreement, and in the merger agreement, they know the quantum of capital they'll raise, they know the valuation that it'll be raised at, and they have a reasonable certainty of that deal happening. From the IPO investor's point of view, they have a low opportunity cost to make this SPAC investment. You know,
All right, so you understand this. We have seen 3 views from 3 different CEOs, and I wanted to introduce you not just to the companies, but the people who are running these companies. And as you see, they all are in the same business, buying other businesses, studying them, seeing if they're successful, giving them money so they can scale up their production and scale up their business. So now that we know that Cubbage had actually bought Hyliion, in a sense, we know that he's out to do something else in the world. Now, with the stock price, and like you said, $11, Hyliion went up to about, what, $55, then it came back to earth at about $18 to $20. Now, think about what can happen on the next venture. What do you think if I tell you the same thing is going to happen again? They're going to find a company, they're going to acquire that company. Your $11 is going to become $20 to $30, okay? That's pending that you are patient and you don't sell at a 10% increase on your, on the shares you buy, and then it will perhaps even gain more momentum, and then will come back to earth. Okay, that's how it's going to happen. I am telling you how it's going to happen, and I'm so glad that I'm recording this, because in one of my future segments, I will go back to this video and I'll show you exactly what happened, which will be a reflection of what I'm telling you today. This is what's going to happen, guys. Now, I am not a financial advisor, and I could be wrong, and I made a lot of videos on YouTube, and I have not been wrong yet. But I think that this is a potential money maker for you, at least in the initial stages. So I recommend you get into it. And they have a long time to find a company they would, acquire. And if they don't acquire any company in the next year and a half, they have 24 months to acquire a company. But if they don't, they will dissolve, and then you'll get some of your money, at 15% loss, I believe. But I don't think this is going to happen. I think these people are eager to find a target company. So having said all of that, thank you so much for putting up with me and my dog, Laith. He's driving me crazy today, by the way. And if you do like what you're seeing and hearing here, please consider subscribing and consider pushing the notification button, and perhaps tell your friends to come over and join the party. You know, we are a very small community, a brotherhood of 36 amazing subscribers, and I'm so excited to have you here, guys. But if you don't like what you're hearing or saying, please don't hesitate to give me the thumbs down and perhaps leave me a nasty comment I can enjoy later. Thank you so much for being here with me on a Sunday night. I will see you again soon when we have made a lot of money. So let's go out there on Monday and kill it, guys, okay? Talk to you soon. Bye-bye.